Hello guys, welcome to the Nasdaq Daily YouTube channel. And from today onwards, we are trying to catch the momentum or the price movements after 9:30 a.m. New York. So we all know that after 9:30 a.m. the stock market will be opening, and we can expect a momentum after that time. So we'll be trying to catch the small movements during that time. It's probably after 5 or 10 minutes after the opening, so maybe 9:45 or after 10. So there are some rules for that as well. So I'm following ICT method. So I'll be looking for some liquidity sweeps, and after that, 1 minute break. So we'll be entering to the trade only after that. So we'll look at a macro behavior. So this is the 1 hour chart. I guess you are able to see my charts. So this is the 1 hour chart. So in the 1 hour chart, you can see that the Nasdaq or the US 100 chart is, or the levels are at high. They already created an all-time high. It's around 21,254. It's already created a high. And if you are checking the movement, the price momentum, it went up accurately, or it went up aggressively without consolidating or without correcting or without retracing much. So we can surely expect a retracement from any levels, because we don't have a benchmark for that, because it's already created another all-time high, and it's keep creating highs. So we don't know from which levels the price will be coming down. So in ICT, what we are looking is that we need to see a liquidity sweep at the beginning, or before entering into a trade, we need to see a liquidity sweep. So if you are following ICT, you will be familiar with the terms: the liquidity sweep, the fair value gap, the BSL, SSL, the break of market structure, the order block, and everything. So there are so many concepts there in ICT, but I'll be taking trades based on liquidity sweep setups, or the turtle soup. So after hitting these levels 21,250, we already got a 1 hour BMS, or break of market structure. This is what we are calling break of market structure, or in short BMS. So if you are checking the levels, you can see a big FVG there. Price already created an FVG. I'll show you. So this is a 1 hour FVG created by price yesterday. So I guess you already know about the FVG, or what is FVG. So FVG is the gap between the three candles. So if you are taking this one, this is first candle, this is the big one, this is second candle, and this is the third candle, and the gap between the wicks of the candle. So here is the wick, the low, the first candle, the low of the first candle, and the high of the third candle. There's a gap. So this gap is called as the fair value gap, or FVG. In short, we'll call it as FVG. So FVGs are very good liquidity points, where there are high probability that a market will react by entering into that region. So we'll be looking for trades, or we'll be looking for entries from FVGs. And I already mentioned, we are looking for some confirmations. So initially there are three rules, so I'll write it down here. The first rule is liquidity sweep. Liquidity sweep. This is our first step. And the second one is looking for market break of market structure in 1 minute time frame. So second step. And the third one is our entry, retracing back to the FVG, 1 minute FVG. So these are the three steps that we want to follow when we are taking trades in Nasdaq. So why I'm taking 1 minute chart? Maybe you'll be asking why I'm taking 1 minute chart. I can take 3 minute, 5 minute, and so many other time frames, but why I'm taking 1 minute chart? So the thing is, uh, the Nasdaq or the US indices are very much volatile. So if you want to catch something, or if you want to take enter into a trade with small risk, you need to take the 1 minute time frame chart. So it will be much easier, and you can collect and you can enter into a trade much earlier. If you're taking 3 minute or 5 minute chart, it will be very hard, or you will get the break of market structure, but still what it's gonna doing is that you need to take a big risk for that. So it's better to take always consider the 1 minute break. So that will be enough for the Nasdaq to enter into a trade. So I'll convert it to 1 minute chart. So we already marked everything. So we'll be initially we'll be looking for a liquidity sweep. So the liquidity here, the liquidity is, if we are checking it, we can already see that at 9 a.m. at 9 a.m. opening, price reacted, mitigated the 1 minute FVG here, and came back here. So here also you can see a liquidity sweep, but still we are looking for, my bias is bearish. Bias is also important. My bias is bearish, so I'll be looking for liquidity sweeps above, or price will be mitigating this FVG again, or I'll be looking for this one, this swing high. This is a swing high at around 21,165. So if price is sweeping this liquidity and giving a 1 minute break of market structure to the bearish direction, then we'll be looking for trades. So just wait for that. And I have a funded next account ready to be traded. So it's just a 15K account, it's just a trial account, so I will be looking for trades there. Just a 15K account, so I'll be risking maximum $150, or 1% of the trade, 1% of the capital. So we will not get it in 1%, so we'll be looking for 0.5 lots. Okay, the price is going up, and I guess it will see this liquidity and come down. But we need to look for a confirmation. That's why I already told you that 1 minute break is very important. Maybe price can go up without retracing, or without, if the bias is bullish, or price is not ready to come back from these levels, then probably price will go up and break this high. So we'll be looking for the break here. Let's watch the movements. So price is almost near our liquidity area. So if you know the liquidity is there, you can go for a long trade here. But my ultimate bias is, or my main bias is bearish. So I'll be looking only for short trades. So I'll be watching until the price sweeps this area, and looking for a liquidity or a market structure break. So let's wait for that. Also, let's look US30 as well. We need to know the direction of US30. So as you can see, US30 is already created a high, and it went down. and USD is already coming down. It's showing a bearish momentum. After sweeping this high, USD is coming down, so probably Nasdaq will also follow the same pattern after sweeping this liquidity. So let's wait for that. We are checking euro as well. It's coming down. So if you like the video, I'll be doing some lives. So please comment below if you need more live videos. So this is not a live video. I'll be uploading. I'll be recording it lively, but I'll be uploading it later. But if you need live videos, please let me know in the comments, and I'll be doing live videos, and we can take the trades together. So there's an FEG. So we can determine each movements of the price. So there are two FEGs there. So price probably if, when there is a bearish candle or there's a down candle, price may be coming down to uh, take some liquidity from this FEG, and then uh, going up and taking the macro liquidity. So price already tapped or mitigated the FEG, and you can see the wick there. Price is gonna go up until these levels. This is a higher time frame liquidity, so we are gonna see some reaction from there. So let's just wait for that. USDT is also retracing back. It's going up. So maybe it will sweep this liquidity. I'm not taking trades in USDT still. I'm predicting that, or I'm expecting that USDT will take this liquidity because there are two equal highs there. So sorry. So USDT may go up little higher and take this liquidity, or when go up to 44,550 levels, and you'll see a wick there and will break this low here. So that will be a great trade if it going like that. But we'll be taking trades here in Nasdaq because it's less volatile compared to US30. So we'll be looking trades there. From the 1 minute price movements, it's very clear that price is not ready to come down because you can see the 3 wicks there. That means price is going up, means price is tending to go higher. That may be the global reasons, like USDT is already going up, Bitcoin is already going up, and US dollar index is coming down, so that may be the reason. Still, you will see a week again, and price will probably go up again. Let's see how this candle will end up. If you are getting a body break here, if you are getting a body break, because this is a beautiful swing low, maybe price is not need this liquidity. Maybe price is not ready to take this liquidity. They already, if the price has already got some liquidities from these levels, then price may not be went up to these levels and retrace from there. Maybe price will went down aggressively from this level itself, but I believe price will go up and sweep these levels. We'll be looking for short trades when if price is breaking these levels like 21,098 or 2100. I guess the US30 and other global markets are driving the price, US Nasdaq price down. US dollar index is going higher, so that's also an important mark. So guys, the price is almost near the liquidity point or the liquidity area. So let's watch how the price react after sweeping the liquidity. So we can see some movements there, and as I already said, there's a liquidity, there's a FVG there, and uh, the actual price movement is like we can take a look at that. So there's a leg. This is what we are calling a leg, and when we are drawing a Fibonacci line, Fibonacci retracement. So according to ICT, the price will came down. Coming, the price will be retracing below the 0.5 percentage levels. So this is the 0.5 percentage, and you can see the price already retraced or mitigated the levels below 0.5 percentage, and price came back, or prices went up, and again the prices we are looking for these levels, and so I just shared the reason why price came back this much or retraced this much, and now it's going up. So let's see what's happening next. So just taking a look at US30. So we already got a good break here, and price is coming down aggressively for US30, but Nasdaq is still it's not ready to come down, because only because it hasn't swept the liquidity, or uh, Nasdaq price is not have much fuel to come down. So liquidity is like the fuel to your vehicle. Sorry. So whenever it's getting the fuel, so here the fuel is liquidity. So whenever after getting the fuel, the price will show the real momentum or the real bias. So let's wait for that. So after taking that liquidity, this is a swing low. This will be enough. Breaking this swing low will be enough. Let's see. So as we expected, price just swept the liquidity levels that we marked, but as you can see, there's not much momentum is not there. So we'll be looking for uh, good momentum from that levels. So yes, the price is coming down. Yes, there's a break. So I'll be looking for a trade here. Yeah, yes. Okay. So the trade is executed and my risk is $150. So it will be around here. So I think the price will go up and maybe there'll be another sweep in that level. So I'll be taking around 1.5 percentage of setting a risk of 1.5 percentage there. And yeah, let's see. So already the trade is already executed and let's see what will happen next. Still there is no body break, so we just entered into that trade a little bit earlier because it's just a week. There's no body break and there's no FEG, so it's actually not the right time to enter into trade. But I already entered and my risk level is a little bit higher, so I guess it's fine. Let's see. If price is breaking these levels once again and we are getting an FEG, then that will be the perfect entry. Let's see. There are chances that price may go up and you can see the wick is very thin, so price may go up again and go a little bit higher like 21,172 like that region, and then price is gonna show the real momentum. Let's see. So as you can see here, the price is coming down. So here we'll be entering a short trade. This will be the stop loss, and this will be our initial profit target. That is 42 points. It's around a 1.5 RR trade. So our final target will be here. So it's around 1:5 trade. So you can see the momentum there. So if price is retracing up there in this FEG, you can take a second entry or you can take an entry there. Or at the time the price is breaking this low. This is a 1 minute swing low. So at the time price is breaking this low, you can enter into a trade. Otherwise, you are gonna miss. Maybe sometimes your price is not gonna retrace to this FEG. So let's see. Price is nearly our first target. This is our first target. Target one. So target two. Okay, let's see. So we can also enter this one, this FEG. It's almost close to our first target. So you can book partial profits here, and you can change the entry point, entry to the break even. There are chances that price hitting our liquidity or sweeping this liquidity or achieving our target one and then going back to these levels or this FEG and continue the bearish movement. Let's see. Yeah, price already touched the target. So just see the fund next account. Yeah, it's already there. We are already in profit, $200 profits. So I'm just taking the partials there. As I expected, the market is going up. Maybe it will touch this region, this FEG, and will be coming down to our target number two. I haven't booked the partials because the bias is already, I have got a bias, and price already went up after hitting, after taking sweeping this liquidity. So uh, I'll be waiting more time. Let's see. So price is already there in our FEG area. So as you can see, there are two FEGs. It starts from here and up to here, and two consecutive FEGs, and price filled all these liquidities. You can see price already there in this FEG, the second one. Maybe price will go up and sweep this liquidity again. We cannot say that, but let's see. So our first target has already been hit, and we'll be closing this trade now. And you can check the levels for the upcoming time period. So that's for today. Bye.